Hello and welcome to the Closing Beat. Happy Wednesday out there to you. I hope you're having a good day. All is good. A little gloomy here in Florida. We are financial advisors like to talk about the stock market because that's what we do here. Other advisors go play golf or do whatever it is that they do, and we focus on growing your dough. That's important to us. Speaking of that, it is the last couple of days that you'll have the ability to backdate or make contributions for 2022 to your Roth IRAs and traditional IRAs. So you want to make sure, if you haven't checked that, if you're really close, you want to just fill it up to get to the max there. The deadline will be on Monday. Because, well, it's tax day coming up. So be sure to take a look back. If you're a client of ours here, when you log into your account, you can select an account, and then you can see like a little speedometer based on the year, and it shows you how much you've contributed. And if you want to backdate existing deposits for 2023, you just click backdate, and then you can actually select the deposits. We'll go ahead and submit that for you. I believe today is your last day to get that request in to allow for enough time for processing. So, yeah. Good luck on that one there. If you want some more information, jazzwealth.com/2023. Give you all the 2023 numbers. I'll probably stop saying that now because it's pretty much getting into the middle of 2023, but it's a free two-sheet giveaway sort of thing that Haley will email to you. We don't have any automated systems or anything, so she'll just email it to you if you like, and we'll stop bothering you from there. If you want to guess where you think the Dow is going to close at the end of next week. Now, that's getting interesting, actually. Where do you think it's going to close? And the closest without going over, we'll send you a $100 gift card. Do we have like a sheet or something? No? Not okay. So tomorrow we'll go through like who's in the lead and see where you're at and stuff like that. And then, of course, you can have a $100 gift card if you win. I've got a couple of them going out already. And you can credit your account $100 if you'd like there. All right, let's take a look at the S&P here, and then we're going to cover some cool stuff today. So we look at the old S&P, bit of a down day, right? So we're still stuck in this range. There's not really much to grab onto. We have earnings season getting started here. Everybody's going to be focused on that. However, that is the widest range that we've seen all week. It is becoming more and more apparent that the market is focused on inflation data. That's probably not new news to you, but you can see that very clearly. All throughout the week, not much happening. Today, we have a wider range, meaning there was more volatility as the market tried to figure out what to do. And in fact, let's do this. Let's go SPY, and then we'll do like a 5-minute chart so you can see throughout the day the difference in the, let's do 5 minutes, yep. The difference in the volatility throughout the day. So you got a gap up this morning after inflation numbers came out. I'll cover that in a second. Wild range, wild range, wild range throughout the day. What happened the last couple days? All up in here. These are all 5 minutes, just ever so calmly drifting higher, not much to go on. Remember, you don't short a dull market, or you don't sell a dull market. That's how they say that. And so that's where we stand. That volatility data, you know, the range in today's performance, that's going to continue for the rest of the week because we have earnings coming up, and that'll be the focus. Kind of a tough night overnight for Chinese stocks. The Chinese markets were down, so that took down names that you'd find in our markets over here, Alibaba being one of them. JD.com almost, no, not quite, almost new lows there. And TAL Education trying to hold on to the 200-day moving average, but basically anything that you look at there is going to have a bit of a rough day, some worse than others, but that was, I'll point out like the FXI. So if you want to look at the Chinese markets and use an ETF, not have to go over there, you're going to see the performance a little bit weak. And so that's where we stand with that. In the S&P, all of the tech-driven names were the ones that pulled back. They have had the greatest moves. I'm going to go like this, and we're going to take a look at the semiconductors. So anything in that space, just about anything in that space, pulled back today. So the whole industry gave yourself a little bit of a pullback. That is, of course, inside of the tech sector. So the tech sector pulling back as well, and that's okay. This is not a scary pullback. This is a normal pullback inside of an uptrend, and hopefully has a little bit more room to go. Well, I'll tell you what, let's do it like this. We'll go over here. And if we look at oil, breaking out of the range there. So that's like a comfortable change in trend for oil, right? And the fact that you've finally broken through that whole month or so far year-long consolidation, that's a failed pattern to the downside there. And so a little bit more bullish excitement towards that, towards crude oil And you see analysts kind of jumping on board with that as well. Interest rates moved a touch lower on the day, although I would call it just kind of break even. It was back and forth. You know, it was kind of like, oh my gosh, what do we do here? Does that mean the Fed's going to stop raising rates? Oh my God, do we worry about a recession anymore? What's happening? Soft landing. You got Warren Buffett saying stuff. You got the IMF chief saying stuff. Oh, it's going to be a hard landing. Oh, banks are going to fail. There's lots of these kind of just intraday comments from heavy hitters that get the bond market jiggling around ever so slightly there. So something to consider there. Speaking of Warren Buffett, you notice how he's everywhere right now? I don't know if this is a thing, but to me, it's an indicator. If Warren Buffett has time to go out there and just give his opinion on everything, I mean, of course, you want to talk to Warren Buffett, but if he has time to do that, what's that mean he's not doing? It means he's not shopping for deals. He's not buying stocks, right? If he disappears for a while, like we've seen that in the past, and no longer on TV, nobody questions that. Like, well, I can't get Warren Buffett on TV. That's because he's shopping. He's out there spending his money buying stocks, making deals, right? So that's kind of like the Warren Buffett gauge. If he's out and about and just having a good time, sucking on lollipops and giving interviews and stuff, you're like, there must be nothing to buy because, presumably he would be out there looking to buy it. So kind of a cool indicator there. Now, inflation. So inflation comes in pretty much as expected. I was a little off there. So we were at 6.04%. We are now down to 5%. Really interesting because now your savings rate is not getting eaten up by inflation. Really cool little spot. We're like right on the cusp of that. So if you save $1, you didn't just lose 2 extra percent to inflation. You get how that works? They call it the real return. So if you put money in a savings account and they pay you 4%, but inflation is 6%, you didn't actually make any money. It costs you money to keep your money in a savings account. Now it's like right in the line there. So we have basically you're getting 5% for savings and inflation's only 5%. So it makes sense to save money. That's not a good thing. When people start figuring that out and they go, now I don't have to shift my money. I don't have to be in the market. I could just let it sit there and use it as savings. I don't have to, take the risk and play in the stock market there. So really, really cool. And what happens? That likely continues. We're going to see that match pair up real close and real tight. So it's kind of interesting to see there. Anyways, inflation at 5%. I had guessed between 5.1 and 5.12%, so better than expected. And core CPI was exactly as expected. 5.6% is where we're at there. We only grew 0.1% month over month, but 0.1% in inflation. If you're a client, you go back and look at that Notes from Jazz, I laid out every single month over month change. How fast would we get back to a nominal rate or the target rate? We're ahead of schedule now. So remember that if you're a client, I took basically inflation month over month, and then I drew out what if it was up 0.5% a month over month, 0.4, 0.3, 0.2, 0.1, and how fast we would get that headline number to be back down under 4%. So we're basically almost there. Anyways, okay, so that's that one there. We have earnings season coming up, and so it's going to be an exciting one, but I want to have data ahead of time. So we've already talked about earnings season, the pullback in total S&P earnings. We've been through all of that over the last couple of days. We're going to take a little bit different approach today and take a look at this. So let's see what we've got here. First, we'll go over to this guy. We're going to say, okay, so the average hit rate, positivity rate for the particular stock during a particular quarter. So what we're looking at is in Q1, the average stock is positive 49.6% of the time. It's a coin flip. If you're looking for the odds to be in your favor, the Q3 earnings reports average stock is positive 51%, and later in the year, of course, a little bit higher. So we've got Q1 here telling us it's essentially a coin flip. What does that tell you? Well, we have to go down and dive into the individual stocks and see how things go from there. Should we do that? Let's do that. So if we know that we have essentially a coin flip for the average stock to be positive, we've got to look through at the individual stocks themselves. And Amazon's a great example. So here is the average gain for Amazon on earnings day based on the quarter. So here's Q1. Amazon has the best Q1. I'm not telling you it's going up or anything. I'm just saying, you want to look for stocks like that. And why are we talking about this? This is not so you can trade it. This is to set expectations. As an investor, you go, well, if Amazon's positive on earnings day, that's normal. I don't have to do any further research. If it's not positive on earnings day, then, well, we've got a problem there. So something to look at there. Amazon, by the way, gets weaker as the year goes on. So really kind of cool to see that if you're looking there. Remember, we're setting expectations internally, not saying, well, maybe the odds are good that it's going to be positive. No, wait. You can go trade if you want. That's your thing. But we're talking about as a position holder. If Amazon is sharply lower, that gives you reason to really take a look at your position. Is something changing? Is there a reason why maybe I should not be investing in Amazon anymore? Or, maybe you want to add to your position and you think everybody overreacted. So something to look at there. What do we have over here? We'll go like this. Yeah, that little button doesn't work anymore. It's not working. Up there, it stopped. Okay, so let's take a look at stocks that have the greatest probability of beating on earnings, sales, and raising guidance. It's called a three-peat or whatever. They beat on all three major metrics. So anytime a stock beats on earnings, beats on sales or revenue is probably what you would see on TV, and raises their guidance, oftentimes that's a recipe for a stock that moves higher. It's really kind of a fascinating thing there. So which stocks have the greatest probability of doing that? So what I did is I looked back and said, okay, we have to have at least 5 years worth of data, right? So we don't want I don't want to like find a company that has 2 earnings. They just went public. And so then I only have 2 earnings reports and it's 100%, right? So you think it's, it's kind of misleading data. We then want to see the stocks that had the most consecutive three-peats, meaning they beat on all 3 of those, right? And so if you were to look inside of the S&P and around, here are the stocks. You got Microchip, 10 consecutive quarters where it beat on earnings, beat on revenues or sales, and raised their guidance. Okay, cool. Broadcom, 10 times. Paycom, 9 times. Avnet, 6 times, or Arista. Ulta and Zscaler 4 times. That's it. Those are your best ones. So if you own any of those, I'm not saying this is trading, but if you own one of those, and let's say, let's take it a step further. Here's their positivity rates or their hit rates. So Microchip is 70% of the time it's higher on earnings day. And we know that it has had a long streak of beating on earnings, revenue, and of course, raising their guidance. So 70% chance that it's going to be positive. If you wake up and you own Microchip and you find out that it's down dramatically, again, that's a reason to say, my belief may be wrong, right? My analysis may be wrong. The company may have changed. Fundamentals may have changed. Something has changed with that company, and you don't have to spend hours looking through to try to figure out what's going on. Maybe there's something you like or don't like. Broadcom has the best one there, 86% positive, and remember, 10 times in a row that it's beat on both of those. As you start looking through the list here, maybe Paycom and ANET, they're not as interesting there. Zscaler and Ulta, a little bit better. Ulta is going to be a little bit more exciting because it's in the retail space, but something for you to look at there. And again, just to say it one more time, if you own positions, this is why I do this research. If you own it, you go, wait, I own Paycom. Oh, okay, well, so it's, that's good. It's doing great, not last 9 quarters. That may change this quarter. Maybe it's a little negative, little positive, whatever. But as long as nothing major's changed, and I know that the sort of the history of the stock, at least recently, is performing in line, well, the company must still be growing. It must still be doing well, have prospects and reasons to believe in sales being higher, margins being fatter, hopefully. And so there you go. If something's changed, it's up to you to believe or to see if your belief is wrong or if you believe everybody else's belief is wrong, which is a tough one to do, admittedly, but now you have something to look at. All right, stocks in the news here. We're breezing through here today. American Airlines kind of ruined it for the airlines here today. Now, the good news is, well, so first of all, they like pre-announced their earnings. Basically all they did there, and they weren't as good as what analysts were expecting. So the analysts were wrong. They had higher hopes for American Airlines, came in a little bit worse. Now the good news is Delta, which took a little bit of a hit today as well, they're going to report tomorrow. Yes, tomorrow. It's about a 50-50 shot. Over the last 8 quarters, Delta has been up on earnings day and down on earnings day the exact same amount of times. 4 times, 4 times. So not really a lot to go on there. We're kind of hoping Delta to save the airline space there. Otherwise, a bit of a weak day for them. Tesla and Elon Musk are in the news for a whole bunch of things, actually. But the main news to start the day was more price cuts. This time it's in China, but more price cuts. They're going to be cutting prices as much as 14% over, actually, in just 3 days. So they said you'll find out more in about 3 days there. So they're wanting to be competitive. Do you see it? I mean, he's making it as clear as day that they're going to compete. They're not just going to pretend like there's no competition out there. I think that's good news. Guy's got a pulse on the industry. Fastenal will report tomorrow as well. Actually, those are the last two names. So you got Fastenal reporting tomorrow. That could be what takes it out of this range. That would be above average if it opened above or below this range. That is not a normal move for the stock. And it is also about 50-50 for earnings as well. And Progressive, which has been on a tear. We happen to own it, so I'm happy that that's happening. But this could be a good reason for people to take profits on Progressive. Maybe, just maybe, Progressive has gotten ahead of itself a little bit. And if they don't have blow-off stellar earnings, maybe it's a reason for people to say, all right, it's been a good run. Maybe let me pare back my position a little bit. If it happens to gap much higher on earnings, that for day traders is a short trade. So that would be two reasons why there might be a little bit of pressure on Progressive. Otherwise, all is firing on all cylinders there. So that's what I have for you here today. I'll attempt to take your questions here, see what we can do, and stretch this guy out. If you have any questions, we'll do what we do. What, Warren Buffett being getting up there. You see, so that's what, when financial media reports things like Warren Buffett said he would give a year of his life to be able to eat whatever he wants to. Well, that's cute, but that's not financial media. What does that tell you when you see an article taking up room on the homepage of Yahoo and CNBC and everything, when it's right there? There was nothing else they could stick right there. No, that tells you where you're at in the market. If that's what they're focused on, like every now and then they'll do something about Trump, right? They talk about that. I don't know where they stand with this stuff, but, and you go, well, that's political. That's not moving the market. But that's what they had. That's the space that they had to use. So it gives you an idea of whether you should be actively chasing after stuff or sitting back and reading some of the drama, you know? Tom says, Dustin, since you work with Goldman, do you know, or can you tell us? I saw on a site that was blocked by a paywall that Goldman says buy this payment tech. I don't know. You mean you saw something where they were saying buy, like purchase the payment tech stock. So yeah, we do have access to all of their research. I last night kind of got wrapped up in the WW research that they did. Weight Watchers. It's not WW. It's Weight Watchers. Fascinating what that company is doing. And since it's in the medical space, I was talking to the missus about it. But I don't know if I have seen anything. I could just look. I don't think I've seen anything payment tech related. Go in real quick. They have a whole, all their research. They do so much research. If you could give me a ticker symbol, that would help. Oh, Global Payments. That's probably what it was. They upgraded it to a buy. So stock's underperformance is an opportunity. I don't know if I'm supposed to be saying this publicly. That's probably what you meant. Let me know if that's the one, so I'm not wasting time there. If that was the article, then it was Global Payments, GPN. Yeah. Was not you expecting the... was I not expecting the market to go higher? Ooh, they must know I'm looking in there while I'm talking, because it's the first time I've ever gotten an alert that says, sorry, there's a problem, come back later. You guys got me in trouble. We'll hit refresh, see what happens. Global. Yeah, but it was too late. We already got the ticker symbol. um, Dustin just say the missus needs to. No, I find it fascinating. Well, that's funny. I'll tell her that. But I find it fascinating how they're getting into the world of being able to prescribe Ozempic. You got to shoot yourself up with that stuff. You know what I mean? Just fascinating because their subscriptions are going down like crazy. People going to meetings, just not happening right now. Online subscriptions just keep falling there. So they're like, we got to do something. They buy Sequence. They go out and buy this company that says we can get that stuff passed through insurance, so people would pay less, and therefore Weight Watchers makes more. And somehow we just have to come up with tutorials, teach people how to jab themselves with a needle, and they're going to lose a lot of weight. With Ozempic and I can't say it. Yeah. Anyways. Shouldn't the market have gone up with lower CPI? Well, that might be the assumption, but why? If the market didn't go up, is the news wrong? So think about what's happening there. If we all expected it to go up, and that's fine, I would have had the same mindset, but we've already come so far. So people chose to use that as a means to take profit and rebuy it at a different place there. So that doesn't mean that that's bad for the market. That's like Progressive, I was just mentioning a minute ago. They could have great earnings and the stock could be down. It's overbought, right? It's overvalued at this point, almost. Ozempic. Oh, was that a commercial? Is that the one with that song? Yeah, I didn't realize that. Anyways, I'm sorry, I got distracted there. You got the song. You know what? Anytime I get a song stuck in my head, you want to know what song I sing to myself, and then it instantly goes away. A little behind the scenes. Cody, can you guess the song? If I get like, see, I got that song that's going around the internet with Miss Piggy going, "I can do it for you," and it's just so annoying. You heard it?
Oh, I don't know that one.
Oh, you know that one. It gets stuck in your head. They usually show a greyhound with a long nose.
Oh.
So what song do you think I sing to try to get another song out of my head?
When You Wish Upon a Star.
No, but that's a really good guess, actually.
Thank you.
No, all I have to do is tell myself 8675309, because it's a number, and then you stinking numbers in there, and inevitably I dial the number hoping something will happen, and nothing happens.
Oh.
Always works every time.
Also, the Ozempic, isn't that O'Reilly's? The way they're typing it out, isn't that O'Reilly?
No, it was from the song Oh, it's magic.
Yeah.
I think that's the one.
I know that one now. Okay.
But I can't remember there being a commercial, but Mbop from Hanson. Not bad. Not bad, just not catchy enough to get stuck in there. But you all are welcome, because now you're not going to be thinking the other song. So 8675309. There you go. And y'all never knew I could sing, so yeah. Ozempic was originally a diabetes drug, and they happened to notice that people are losing weight, and there's not really any side effects. Ding, right? So if you're familiar with the background of that. You've been building a ladder of 3-month, building a ladder of 3-month T-notes there when it hits low 5% yields like that over the last couple of days. I think we're running out of time for this yield. Is there nothing that says we can't go sideways? What happens if you get the Fed content to not do a whole lot right now? Now I get it. It signals possibly the peak, and that would cause your rates to fall a little bit. But would it be that much? I think you're okay. The Jeff Bezos song is a good one. Yeah.
I don't know the Jeff Bezos song.
Okay. Yeah, there's a song. It's kind of like a vintagey sounding song. It's very annoying.
Oh.
I know which one.
Yeah. It's a tough one. How do you square the chart showing a dip in one Cohen's earnings performance with the companies that have three-peats? How do you square the chart? Dip in quarter with companies that have in three-peats. Oh, I think I know what you're saying. We're going back to over here. So you're saying, well, how do you make sense of that? This is the average stock in the S&P. So granted, those are S&P stocks, but we're saying this average stock in the S&P, which means there's a tug of war. However, we can go and look and see the top breadwinners, so to speak, and we can go into which individual stocks are pulling the average that way. We could also look at the ones pulling the averages the other way. I didn't think of that till just now, actually. Yeah. Healthcare, a safe sector these days to play on. Well, now I'm a little bit particular here. I won't go into this area of the sector, but biotech is, if you were to look up, so in the analyst world, not only do we track the ratings and their success rates and everything, but we track the speed of the sentiment. So if there's a lot of movement over in a particular area, doesn't really matter, it's getting attention. And so we'll go look at it that way. And right now, the speed of the movement's going over to biotech in particular. I don't like it. It's not my thing. Just not my area there. But healthcare in general, obviously, it's had a great run. Johnson & Johnson, United Healthcare, all those helping it out. But as you get a pullback there, well, yeah, why wouldn't people think that that's a viable pullback? But the real excitement at the moment is in like that small cap biotech space. It's just not for me. You got to turn 4,000 into 40,000 quickly. What's the best way? Well, look at your history. You know the best way. Take that money down to the casino and do what you do. Just be on the other side of the fence. Your car I'm sorry, man, got totaled. Not buying another one for 6 to 12 months. That brings up a question. What's the best thing to do with your money for now? Nothing. Don't do anything with it. You can get, now it's annualized. It's annual, APY. You're getting, 4.4 to 5% to just let it sit in savings. You don't want to find out that the market fell 6 months from now. You want to buy a car and car prices fell, but too bad your money's in the market and you lost money. You just hang on to that dough, right? And sorry to hear about that car. That's right.
I think Dear Guy's got it.
Dear Guy's got it? What'd I miss? Oh, so, well, hey, got to do what you got to do. I don't picture Joe as having the kind that are going to sell well, though. I heard a rumor LMT is buying Boeing. Just a rumor. Yeah. Green Concepts got Shell Station contracts all of Florida. Did that happen? I saw something a while back that was in talks. I thought it was the Circle K gas stations. You might be right. You probably beat me to it there. You'd probably be right. I don't know enough to say that I do. I thought it was Circle K, the gas stations, but it's a fierce competition down here in Florida between Wawa and Thornton's and stuff. What's the other one? Racetrack. Darn, like little mini malls in there now. Yeah. Oh, boy. Okay, we're going off track here. We're going off track a little bit. I'll wrap it up and we'll be back tomorrow. So you guys think about how you want to make your extra money and don't send me links to anything, please. All right, enjoy the rest of your evening or day, wherever you're at there, and we will see you tomorrow.